Hmm. One second. There we go. What's up, everyone? How you guys doing? Cashback on Fubo subscriptions. They're doing like a big marketing campaign, I think. So, yeah, I'd expect to see it pop up more often. I know a lot of people have said they've been seeing it on YouTube a bunch, and hope you had an enjoyable long weekend. It was long. Gurk dance doesn't work in chat. Stop posting the Gurk dance all over the fucking Discord, all right? Carl will time you out. Hey man, let's get the BBBY tragedy out of the way. Also, what are the expectations for Revlon this week? I don't know. Revlon's setup is kind of interesting with the 3 consecutive days of increasing price. There's definitely some pressure building up there, but there shouldn't be, right? Like there shouldn't be any ETF FTDs. Um, Theoretically. There are FTDs from August 1st, so we'll see how that plays out. Kind of just watching it to see what happens. I mean, we're still trying to figure out where the majority of exposure on Revlon lies, and the only way to do that is time, right? Did you get signed on your Fubo CSPs? I think I did. I hope so. As far as the BBBY tragedy, I mean, nobody in the world could probably care less than me. I don't know him. I don't know his family. I don't give a shit about any of them, but I still have the respect to not say awful things about it. So if I can do it, you guys can too. Act like fucking adults. You can discuss how it applies to the stock. You do not need to insult him or his family. It's low class. Stop acting like pores. How do we sign up for the synchronized roller skating team? I have no idea what you mean. Shit. Frosted Flakes, welcome to Dillionaire. Thank you so much, man.
Happy birthday, Gurk. Yeah. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no coke. Get the cash in advance, cause we hold in the float. If you are what you eat, that makes Gurk in the go back.
What's the OCC thing mean? It's just the, like, on loan hedge balance from the OCC, which is just like a data point that I wanted to, like, add to the stuff we're looking at because maybe it's relevant. We'll see. I'm sure it just goes up when the price goes up and goes down when the price goes down, but it's not something we're tracking, and it's something we could be tracking. So that's about it. Expectations on nat gas and uranium plays this week. Specifically, why? I mean, like, I haven't bought into any commodities with like a near-term expectation. So why uranium and nat gas this week? Iron Archer, welcome to Dillionaire, man. Thank you so much. Hit me up on the Discord, guys, and I'll get you added after the stream. Thing? Yep.
Yo.
They're saying maybe 2 days worth of FTDs due tomorrow, but we have a holiday week sometime back that didn't happen. We found out there was some way for them to put it off. No, I think a lot of people get confused between obligations and like ETF obligations, like due from creation, and FTDs. They're not the same thing. They're different things. Like Opex has nothing to do with FTDs. It creates them because it's a high volume event and the stock is illiquid. But like FTDs are settled regardless of holidays. There's no deferment for like Reg T, right? So if an FTD is due on a holiday, it is simply due the next morning by market open. What's up, Gerg? Had a good weekend? It's been okay. Thanks for asking, B-Taco Man. Spy thoughts of the week. More short profit taking into the next Fed meeting. Possibly. I really want to watch how like futures continue to perform. They're doing all right now. But bonds are still down a little bit. Like, nope. I think the T-bond futures were still down slightly today. They're coming back up, so the recovery is not terrible. ES minis look really good for like a pullback up to the, I mean, hopefully 400 level. I don't know if it'll move that high, but it may. I mean, we don't really have any bad economic data this week. We do have a Powell speech later in the week, and that could, you know, reignite some of those fears of like rate increases, but mostly this week's kind of unimportant. And so with that, you know, we may see some profit taking, especially with so many of the positions expiring in September, like on September 16th. I think we saw a little bit Friday morning, but I think we'll see more, you know, with a lot of those just being cash settled and exercised out. We'll probably see a lot more of it this week. Functional Chungus became a Dillionaire. Thank you, Functional Chungus. DM me over on the Discord and I'll get you added, man. Thank you so much.
Happy birthday, Gert. Yeah.
Russian shut off nat gas to Europe. It's gonna get spicy. Yeah. Completely. I thought that was just like a pipeline issue. It's not winter yet, so I mean it's not gonna get that spicy. From like on the industrial side, it will. Are we expecting any FTD VWAPs for Fubo this week? No. I'm not expecting anything for Fubo. So I think Fubo is going to cycle back in to being a volatility play. It used to be one, right? Like, did I just fucking close it? Son of a bitch. Hold on. This isn't set for the right time frame, but I expect Fubo to become a volatility play like it used to be, because they're affecting a lot of changes. Most of the short position is still there. You know, last year, you know, Fubo had really high correlation with the rest of the basket. You know, it ran in June, it ran in August, it ran in November. This year, not so much though. As the company was kind of on its last legs until some financing came in. So, you know, if we look at the March run, for instance, for Fubo, it was kind of insignificant. You know, it ran, where is it? Right here. It ran up like from $6 to $8. But then, you know, we got this massive dump of volume, which was huge, right? This was like almost more volume than was traded in January of last year. And, you know, volatility spiked really, really hard. That's going to attract volatility shorters, which will start, you know, building up obligations against that still quite large short position, and will hopefully spin it back up into the volatility cycle. And if it does that, obviously, like Fubo is going to be, especially at such a low cost basis, will be very attractive for, you know, selling covered calls and building a compounding a position that way. But we'll see how it works. I mean, it's kind of experimental in a way because it's been dropped from the short volatility positions for quite some time. So it'll be interesting to see if they come back in and start shorting the vol on it again. I can't see them not doing it. It's quite profitable. In the meantime, the company, from a fundamental standpoint, is doing a lot to improve itself. So, you know, I think real value is going to be brought in over the next year or two, and in addition to that, I think that we'll start to see the volatility shorting come back. Are you expecting FTD VUPs for Fubo? So we'll watch Fubo. I mean, like, the idea is to buy Fubo for the long term, not to play short term windows on it. But if we do start to see a renewed correlation with the basket, then we can start to, you know, strategize positioning for Opex and FTD events. It shouldn't create a lot of FTDs. It's quite liquid, much more liquid than many of the other basket stocks. But this, you know, around this time last year, it was still getting reg showed pretty frequently. So I don't know. We'll see. I know it was on reg show the entire time GME was in the lead up to January of 21. I got more entries into uranium and nat gas this week. Currently holding leaps for both. Yeah, I mean, don't chase the news though, right? JW? Like if pricing's still relatively fair, awesome, because like the cutoff of nat gas is gonna drive up prices going into the winter. Um Make sure that whatever natural gas companies you're looking at have exposure to the European market. But I mean, yeah, don't chase the news rally, right? If it starts rallying, just probably stay away from it till it calms down. Any of the weekend's news looking to hit the price of GME tomorrow? I'm playing FTDs tomorrow. I am too. I don't know, the lawsuit, you know, naming Cohen and the CFO is going to be a good excuse to short the stock in the pre-market. So we'll see. It could. It could. You know, obviously, you can't plan for events like that. It doesn't mean that the shorting will be sufficient to suppress the ETF FTDs, but it could drive the price down before it runs. SPX heading towards 4K again. Probably. I remember a Monday holiday and Tuesday it didn't happen. Someone said the holiday rule that allowed them to push something off for a month. That's OPEX. That's totally different, Ryan. That's like the Opex obligations because the settlement occurs on a holiday and they can mark like, you know, the settlement and transfer or funds purchased not yet received because of the holiday, and that can delay Opex settlement, which is something like we saw in February to March. But that has nothing to do with FTDs. It doesn't have to do with ETF FTDs or FTDs, except in the nature that the obligations and ETFs are created to wash FTDs through the period. You see, you ETF share creation. Yes, as in the SPY share just as in a SPY share just created, and the SPY needs to buy shares of what it tracks. Sort of, yeah. That's a very simplistic explanation of creation, but sure. You see some nice ouchies during the SLD period. I mean, we don't see anything. It's just expected to drop. There's no forward indication of how big SLD will be or what effect it'll have. It just usually leads to a sell-off of assets. What would be the best way to get exposure to nat gas and uranium plays? There's a lot of natural gas ETFs, which would probably be the best way to get exposure. If you're not super familiar with the sector. There's Shell and Terra Resources is a really good one, or it's been doing really well. Hmm. There's UNG. I think ProShares has like some leveraged ETFs for natural gas, which could be a good way to chase the news. There's UNL, but I think that's US. GAZ, I think, is one. GAZ is like the natural gas like sub index. For uranium, I don't know. I have like Sprott. I don't like CCJ. Um, there's Kameko. There's a uranium royalty fund. UROY. Uh, Sprott's really good. It tracks like physical uranium. It's like physical uranium ownership. So those are a few. Maybe something cheap like Denison. Denison's really cheap still, right? I don't like sympathy plays, but yeah, this will probably have some sort of run. This company sucks, by the way. It's just dipping my toe in. What's up, Dominic? It's me. It's my birthday. Happy birthday, man. I'll see you later. If oil spikes hard and sustains, say 130 a barrel, how low could that drop the market? It probably won't be until the effect of oil spiking is realized in inflation, but yeah, it wouldn't be good. Oil prices like above 100 a barrel are definitely going to have an effect on index pricing, especially the S&P because it has a lot of oil exposure. I don't know how much it would drop it, but it would drop it. Probably a few hundred basis points. Just remember the Nikkei will move in the opposite direction of the yen if Japan sells treasuries. Currency and primary markets are generally inversely correlated. So like Dixie goes up, S&P goes down, yen goes up, Nikkei goes down. And it wouldn't be just the yen going up, right? It'd be like a squeeze on yen. Yen is super over short. So it would drive up volatility. Volatility would wreck the primary index. Mentkes. Thank you so much, man. Hit me up on the Discord. I'll get you added. No Discord audio. You're gonna buy Fubo this week. DCA for me is 3.59 a share. 200 shares, buying 100 blocks to play calls with. Probably. I think I just got assigned on 3,000 shares, so I'm building up a position. But yeah, it brought my cost basis down quite a bit. My cost basis before was like 399, so now I think it's down to like 360 something. No problem, man. As a Minnesota State Fair yesterday in your honor, I took a picture of the pickle pizza. I didn't try it myself. My buddy said it was really salty. Posted pics and tagged in Discord. Oh god, that's disgusting. I'm glad you didn't eat it. If there's further shorting, can we just look forward to an actual Opex this month? I mean, that would be nice. It's lining up well. We have some negative hedge, prices dropping. That's going to incentivize call buying, which gives us that platform for strong upward price action. So it looks good, but we're still taking it day by day in order to minimize risk. Did you see a merger acquisition with the removal of the credit rating that could possibly be announced at earnings? Maybe, or they're just renegotiating their like revolving credit like facility. I mean, there's a million reasons that the credit rating could have been pulled. Does Duke Energy have European exposure? I have no idea. Why don't you look it up? What are your expectations for GME earnings? How do you see price action play out? I I mean, I think earnings will suck, but they may be better than their previous earnings because at the last earnings they said they were going to reduce their SG&A going into this quarter. They were done with like this cycle of growth investment. So maybe we'll have better EPS. I mean, it's still not going to be great, but maybe a little bit better. Which could be, a catalyst for long positions, but um I'd imagine they'll probably just short the fuck out of us. CCJ Kameko? Oh, okay. I don't like that company. I think it's overpriced. I think it's been overpriced for a while. I haven't looked at their chart in like a month, but I'll take a look. Hold on. Yeah, I think it's still just kind of overpriced. Definitely overpriced at $28. I wouldn't get this at all. See, Sprout's a little better. This rejection's good. I don't know if it's gonna probably break up with the news tomorrow. Hmm. Yeah, you might not be able to get it under 50 again, but or 55. At least, I mean, like the amount of room to its local highs is much better than Kameko or CCJ. So it's got a little bit more upside stability and a little more range. Did you have a barbecue at your new house? No, I haven't been there since I took ownership. What's on Jonathan Grantham, Jay Grantham's comments on a crash? Basically saying the market has run its course with its 3 bear rallies. Haven't seen his comments on it. Um, Not someone I follow, but yeah, it's possible. Can you please use Epic Pen to describe what you spoke about briefly Friday with Vega? If Rev hit $11 and Vega becoming a 2.8 or 3x multiplier, what would that do to Rev 35 leaps? Well, it would increase the amount of pricing for Vega. So it would act as like Vega acts as a multiplier on implied volatility. Kind of the way like delta acts for intrinsic value with price. Except Vega can keep going up beyond 1.0. So Vega is the delta of implied volatility, essentially. So, if IV hits 300 and you have a 3x multiplier, that's $9 of IV premium on top of the value of the contract. I heard Mark's on how GME is tracking Tesla price performance from their stock dividends. Not the latest one, the one prior. Crazy to think the slow GME down seems to align with September Opex cycle. Thanks. I mean, it does align with the September Opex cycle, and if you go back and look at Tesla's split, which was back here, there's some correlation there. Not quite the same. Like we had the same drop off in price, and then moving into November Opex, we had the ETF FTDs kind of lined up here, and then into November Opex, the price began to rise, and then that just continued for months. So, probably most of the carryover price action was realized here, though, during the actual like November Opex period. And then, this was probably more market sentiment into the next like Opex period in January. This was January, like end of December into January. So, a lot of this following the Opex period was, market sentiment mostly. I'm sure there were FTDs and stuff too, but not a lot of Opex price action following that. I think December Opex had a significant amount of volume, but it didn't have a lot of price action, right? I mean, Sitting Bull, I just don't know, so that's why I told you to look it up. Duke Energy doesn't have. Okay, there you go. Is SPY doing a big ol' inverse head and shoulders on the daily? Um, no. You mean like this? This isn't really an inverse head and shoulders. I mean, you could draw one, but it's really like no. There will probably be a rally. I don't know if it'll rally back up to the previous trend, but there will probably be a rally before it comes down more. You could also just say that this is a head and shoulders, especially if it bounces here. I wouldn't use those like inverse head and shoulders or head and shoulders as any kind of deterministic like technical analysis on the SPY on the daily. Maybe on like the 15-minute or 30-minute, sure. But no, this is too much volume data. Does being a homeowner change your perspectives on crime and education? No. I have a few calls to the FTD cycle. Plan to exit tomorrow. If we get a run and sell out of the money CCs into earnings, target 9.9 or 9.16 for more premium. Think the SPY will run it all, helping us out. I mean, maybe we have to see how much short repositioning there is tomorrow and Wednesday. But I think it could. I think the SPY's set up pretty nicely for a bounce. There's a higher low on the daily, which you can see there. It looks a little better on the 1 hour. But we did find a higher low here. And we are set up for a little bit of recovery. I don't know how high this is gonna run. Maybe like back to 406. Upside volume still really weak, but um, it's set up okay for a move up. But that'll rely entirely on short side profit taking. If they don't, we could easily move down to like 385. So it really depends greatly on what happens with like large institutional positions on SPX. Later, McLong Johnson. Let's use Epic One because it's less sassy. Sorry. Can we expect ETF FTD price action to bring us up over 10% like it did in Feb, May, and August? Or is that reserved to the F-Man months? I mean, we can go back and look at some of the ETF FTD periods. I think like, early June was very good. That's not part of F-Man. Feb was definitely good. December was kind of shitty. December ETF FTDs went from like a low. It was still like 24% actually. Yeah, not terrible. August was obviously insane. um like that August ETF FTD period, which I still have marked here, these two blue lines. That was nuts. We still have several days left. We're only on the second day, but it doesn't look like ETF FTDs are very high into the end of this period, at least from the ETFs we're looking at. So, I expect whatever price action is left will probably be realized like tomorrow, maybe Wednesday morning a little bit. After that, it kind of dies down. But no, it's not reserved for F-Man. I mean, like October's ETF FTDs were very high. July's last year were pretty high. June's tough because they were doing the share offering. But April in 2021 was, drove some pretty serious price action. I definitely didn't say SPY all-time high. Can you please show the rev chart on the daily? No real reason. I just like looking at it. Sure. Rev actually looks fucking awesome. I'm not gonna lie. It keeps revisiting like spot prices from when they were shorting really hard. And it's definitely building up some pressure. Over the last 3 days, if you look at the daily, I think we've had higher and higher closes. So this is actually looking really good. We have T plus 2 plus 35 from like when they got us off Reg Show on the 7th and 8th. And we have some ETF FTDs from that period coming up September 16th. So right at Opex. Depending on how that plays out. July 15, like this period, doesn't really have a lot of volume. So it's not until sort of the end of it that we really see a lot of volume pick up. But, overall, the trend is continuing up and it seems to be strong. I think we're starting to see the effects of retail interest on this, and it's bullish, right? Because there's such a tiny free float that, the shorts compounded FTDs over here. Now we've begun, like, as retail investors have begun to put pressure on the very, very tiny float that is available. That's on ETF rebalances. We ran pretty hard in June. Might be another big run. That's in September. That's when Opex is. Opex and ETF rebalance are simultaneous. Where do I start with trading as a whole? I've only played GME shares. I want to learn more. I checked your other channel, but it doesn't really cover basics and all. Should I read a book or courses? You should probably check out the Intelligent Investor, Securities Analysis, Technical Analysis of the Financial Markets, and Options as a Strategic Investment. Also, hang out and watch the stream. You'll get a feel for it pretty quick, I think. Nothing better than full immersion if you want to learn something. Can you elaborate on why you think Rev is interesting with going up the past 3 days on record low volume since the bankruptcy pop? Yeah, the volume's died off really, really hard. But consolidation is good. I mean, even from a technical sense, tight consolidation like that is positive. And the fact that, we do have higher lows is also bullish. We're coming off of that big short that happened like that intraday one, the high volume short. That was, you know, covering of FTDs too, like a forced covering event, just the not the kind of FTDs we want to see, right? Don't forget that, you know, it still fails at a very high ratio. So even though like this period is generally a period where FTDs are generated, right? This is coming up like into mid-September. And so these FTD cycles move from periods of, you know, generation to covering to generation to covering, and then that goes on and on and on. But the higher, you know, the FTD generation is, you know, the more price action during the covering period. If just to break it down in really simple terms without getting into the plumbing of it. So I buy 10K in the money rev calls for Jan. Will I cause a squeeze or dip like that last guy that bought 4K shares? Um, I mean, if you bought 10,000 in the money Revlon calls and exercised them, you would definitely fuck someone up. I mean, that's a third of the free float being exercised and probably failed to locate, which would trigger reg show inclusion. I don't know if they could even locate in 13 days the a number of shares that you would need for that exercise. When you speak about ETF obligations, you mean they have to buy shares of whatever they track because they created new ETF shares? Essentially, yes. It's not that they have to buy specific shares that are created within the ETF. So they create a basket of shares, and then specifically they can take that basket, return most of it, and then just create shares of one single stock contained within that ETF. They don't actually need all the shares, right? Like, so if they want to short GME, they can create a basket, pull the GME out, return the rest of the shares, then create another basket, pull the GME out, right? And then now with the most recent regulation changes, they can just specifically create a basket of GME out of an ETF. And then yes, those shares can then be written into future like forward contracts, which are settled on Opex dates. And that's when we see covering across the basket, right? Because then they cash settle those failures on those futures, they cash settle those futures, not failures, and then the ETF goes to the market and buys the stock. Do you have, no one's coming and staying with me for full immersion. Do you have a price target for Rev or just up? I'm really bad at taking profits. I mean, I'm trying to just take profits while maintaining exposure. So if it rips and starts to squeeze, awesome. But in the meantime, you know, I'm just cycling those $35 calls and taking profits off them when there's a chance. They've been quite profitable so far. I mean, that's really all you can do, and the taking the profits is just it's advantageous more than anything else. What's happening here? Isn't this policed by institutions? Not really, especially not XRT. I think in XRT you see a situation where your creation is far in excess of the net asset pool of the ETF itself. I bet if I buy 10K cash, not calls, no, that's not gonna do shit. How do you pay your bills if you have no money in your checking account? Asking for someone interested in marrying you who's doing their DD. You can get like broker cards for your brokerages. You can get an IBKR margin card, which is just a credit card against potential margin in your account. Fidelity has like a broker debit card. So you can use your brokerages as checking accounts. But I just transfer like my living expenses out of my investment accounts every month. And other than that, like I don't really spend any other money. How in the world do you track this? This is fucking valuable. I know. Long time commenter, first time watcher. Hey Trash Dan, long time watcher, constant commenter. Learning a lot about trading in the markets, but still a little confused on some of the finer points. Can you explain again what a stock is? Oh Jesus fucking Christ. How are you playing this month's coming inflation report? Short, long dated strangle? No, probably just short. I'm gonna stay short through that whole period. I'm pretty sure. Like, I intend to be long short from mid-September through, well, from the CPI report through the Fed meeting. So probably October, November. I mean, I already have October SPX positions, but I might get more in November. I have November VIX positions. Um, I've been taking profits, which has kind of weakened my overall short position, but I'll re-enter as soon as I feel like we've gotten a decent pullback and there's an opportunity. Thoughts on Intel? I fucking hate it. Do you want to own it for 5 years before it does anything? Because then, sure. Otherwise, I'm not a big fan. I know it's at all-time lows. My wife said she wants to try anal. I'm not too sure. The strap-on she got is huge. Of course it is, Carl. You're caught up with chat? What kind of madness is this? No one watches this stream anymore. I'm finally successful in getting rid of everyone. Okay, I lied. There's like 600 people in here. Never mind. I thought I was successful. Maybe people just don't have a lot of questions today because this week is going to be mostly uninteresting. I hate Intel too, but for different reasons. I mean, it's just like everyone's like bullish on them building like their chip manufacturing facility in the US. And sure, that might cause like some near-term price improvement, but the value of that isn't going to be realized in their shares for forever. I mean, it's going to take like 5 to 10 years to build that out. It's like everyone being bullish on TSMC moving to the US. It's just not, the timeline is forever long. Like, I'll be dead before that probably happens. Do you have any time to look further into APRN? I mean, I just care so little about it. It seems fine. It has Opex exposure, but very weird Opex. Like, it's not the same Opex exposure as GME. Like, it barely moved in March, but it moved hard for June Opex into July. Um, which obviously put some pressure on the short positions, but I mean, it came back. before it started running up really hard. So, you know, whoever was in here probably bailed here on this high volume. The churn on it's pretty ridiculous. I know the free float's really small, right? It's like 7.34 million. I mean, as a company, they suck. Their earnings are terrible. Their balance sheet is awful. Um, but yeah, I mean, I guess it could have some potential to run more. It, it'll probably be a while. Um, you have this, and most of this kind of looks like accumulation. Let me see something here. Why is everyone all about this stock, by the way? Is it on Reg Show or something? This is May. We're going to go from here. June 15th. So that would have been realized here in early August. October. So it kind of ran for like August Opex. So it's on a different cycle. Like it ran through the 19th and peaked on the, so I think we started to see the like T+2 covering here, but this is looking like ETF FTDs are really high from like June Opex, which was the 16th. 17th. So that's when those started, and then they carry out for a 6-day period, which was like a lot of this price action, and then it looks like it then had a like an Opex run as well. So this may actually die down a little bit if it's, so this might be like J-Jow? No, not J-Jow. April. Let's see what it did for April. Nothing really interesting for April. But Jan. So Jan, June, and August. So it ran on the leap dates, and then August is weird. You can only assume it's continued exposure from July. Huh. It's interesting. I'll have to look at the fails and stuff on it. Thoughts on 3M? There's 206,000 in puts, 916, 200 strike. They have some like there's some like potential bankruptcy thing here. I mean, all those puts are massively in the money. It'll probably cause some pullback when they're closed, but maybe not a lot. Like I would imagine that those shorts will just continue shorting. I really don't know how bad their situation is. I mean, they own the intellectual property for like almost every material on the planet. So I know from a value standpoint that they're still worth an obscene amount of money. So I assume you're trying to play the bounce, but like you're asking Gordon Ramsay because you want to play the bounce back when those puts are closed. It could just be exercised though. Are you streaming earnings? Yeah. You'd think that with a members only stream that the rate of likes would be much higher. No, because it's an inconvenience. Intel is always late and behind schedule. Yeah, I know. I think DLTR will bounce back. Let's see. Ew. What the fuck is wrong with this? Probably. Yeah, I'd imagine like next earnings will probably be decent for them. They move on their earnings, right? So expectations are low. Decent entry price. I don't know how much it'll bounce back, but it looks like it could bounce back a little. I really wouldn't expect them to do this poorly. This seems like a very high volume sell off. I wonder if there's some fundamental change that I don't know about. Any news? Missed forecasts, lowered outlook, which should be expected. But the lowered outlook will be good on the next earnings, right? When especially if they beat the lowered outlook. Full year, they cut their profit forecast. I mean, it just looks like they're moving ahead of what all of the retail, actually, not even just all of retail. This is what all big companies should be doing right now. They should be lowering their profit outlook. They should be lowering their expectations into quarter three and quarter four of this year as their margins shrink. So they're ahead of the curve on that, and that's probably a good thing. The current price is phenomenal. And if you could get it at the like 128 range, that's spectacular. I would imagine that it will claw back some of that value into the end of this year. It's actually like Dollar Tree is actually a pretty well run business. I haven't looked at APRN FTDs. That's what I would have to look at because I got to see where the exposure is. Are you forcing us to think of questions? Here's one. Do you like any other strikes for Rev besides 35C? Yeah, like $5 or 650, 750, 9. Anything like at or in the money is awesome. Because that puts pressure on the like put gamma. Like Revlon put gamma is really high up to $10 because they don't want it to cross $10 because then they have to hedge those 35Cs and they have to hedge the Vega uptick in those 35Cs, which is astronomical. If it pushes, I think like if it pushes past like 12, 13, it just they have to flip the hedge, and if they do that, it's gonna create like a lot of violent upside. Sell GME Monday, Tuesday, 2 weeks out until the 23rd. It's through earnings. How could I get burned? Opex? Opex can burn you. Also, selling them Monday or Tuesday could hurt you as well. Earnings are Wednesday aftermarket, so that's probably when I'll sell covered calls. I'll sell them pretty far out of the money too, in case earnings are positive in any way. But hopefully the IV spike makes up for the loss in Delta. Is there any downside to sell CC into earnings, but keep it till expiry of end of week? Chances of GME running? I think as long as they're above like Gamma Max, you're probably mostly safe. Or safer. Guess I'll be buying more Fubo then. I like it. How far out are your longest DTE spy puts? December, Jan? Or do you only play 1 to 2 months out? Currently, November is my. Well, I don't have any for November yet. I have October, but I'm going to buy some November ones. I don't hate the pores. I used to be one. Stopped out for a second, so not sure if you missed my question. If I want to deleverage my GME share position a bit, am I better off selling at the top of Opex or aggressively selling covered calls? I mean, both of those are good. You can aggressively sell covered calls until an Opex, or you could sell at the top of an Opex if you want to reduce your exposure. I can't understand wanting to reduce exposure on GME. Do you think there's somewhere where your money would be better off? Because there probably isn't. I made a poor buy on Rev when it was trading at 920 a couple weeks ago. Luckily, I sold at a minimal loss. I'm worried about IV Crush on my next purchase. Can leaps go below $1 soon? Maybe not. I think Revlon's setting up to run right now. We're gonna see, but it looks like it's gonna run. Like we're gonna get another like August 1st type of event. Party. I really hate it. We played it last year and it just sucked. Sure, it's it's not terrible. Um, volume's interesting. $6? I think you might be out of your mind, but best of luck to you. I can see it hitting 3. Like 3, maybe 4. I don't see it hitting 6. The sixes will go up, but that price target seems like a bit much. I talked about Fubo a bunch already. Rewind the stream. You probably addressed it, and I likely missed it. But what's the significance of the stock loan hedge balance? Just more data to track. It's nice to know how much like on balance loaning is going on for the hedging of GME. So another data point we can track. It might have some significance. We'll see. I don't think it will. I think it will mostly just go up when the price goes up and come down when the price comes down because it's a notional value. It doesn't tell you how many shares. But based on like VWAP, you can kind of figure out how many shares are on loan specifically for the hedge, which could allow us to see when they are properly and improperly hedging to some degree. So I think there's potential for the data, but I just wanted to show it to people. It's cool. What do you think of JFresh's 2GN chart on GME? I love it. It's great. Do you have any website recommendation with which one could build a scanner? I mean, depending on what you're scanning for, like Like Trading View is pretty good, or Finviz. I don't know, I couldn't think of that. Finviz is really good too. For free, also. It's very customizable. Still bullish on Rev. Are there any countries you were bullish on besides the Midwest, like India or Mexico? Bullish on? No? I don't know what you mean. Can't say about watch later. Want to say thanks. No problem, Northern Cowboy. What's up, DV? Ever thought of asking your team to write some algos for some of your plays? I scalped the spy pretty decently. I'm coding my strategy as I'm listening to you. Sure. Um, I mean, it's nice to have those. I don't generally scalp anything, and so I don't really use trading algos. You can set up like I generally trade momentum. You can set up algos for that, but I don't really need to. It's they're like swing positions. They don't require a lot of like active management, so I'm not doing anything where I need that kind of precision. Can you explain hardy decompositions and its use in price? How much an option should be when buying? I mean it's just uh like you can create a spreadsheet of like D1 values um in order to like better understand the pricing of options at a glance. Right? Like obviously it's something better coded and you're going to get far more accurate results using an options calculator, but you're not going to be super far off if you're using that as like an estimation of options pricing. Like it is absolutely not um correct, right? But like you can have like D1 values of like 0. 0.1, 0.25, 0.5, 0.75, and like understanding that value, you can sort of tell the pricing of the contract versus the cost to hedge it, right? So the premium, like the premium benefit to the seller of the option, which sort of allows you to see the or or at least hone in on like a strike range within so many standard deviations of the price that you're interested in, and then you can so you can use that, and then you turn to your options calculator and do the actual math. So it's just a way to like estimate, right? It's just like a quick at a glance kind of thing, because you learn all the like the D1 values, and then once you know those, you can kind of just like look at it and sort of see what the price to hedge is. It's not probably great for everyone, but it kind of works for me. There's a lot of different like simplified Black-Scholes things that you can use to kind of at a glance estimate option pricing. For delta skew, you can generally just look like at same strike calls and puts if you want to know like what's priced higher, puts or calls. Yeah, you're selling them higher pre-earning. I mean, the risk is like they blow earnings out of the water and the price rises really hard, and you miss out on the upside potential. That's the risk, right? Is the unrealized gains that you would miss out on. Have any thoughts on Amorous? Thanks. I don't know what that is. Is that AMRS? Is this company? It's had some really interesting price action recently. Revenues are getting better. Insider sales, that's not good. Resigning CAO. Kind of a big float. I don't know what the fuck they do. What do they do? Candy company? How do you lose money as a candy company? I mean, it looks like there's some accumulation going on here to some degree. Many of my orders through Amazon lately have been getting lost in transit. Bearish? Maybe. Nothing looks good for a play this week. Everything is just sitting near resistance. How do you pick which side to play on weeks like this? You can straddle them, you can strangle them. You don't need to have a directional strategy all the time. I usually do. I do research and try to build confidence in a direction. Sometimes you're wrong, and you just bail quickly, right? I think 3M 916 100p are oddly mispriced low. Do you think it'll drop that low? Enough of this bullshit. Is Tesla dead? Tesla actually did like okay, right? Like Friday. I thought they would have lost more value than they did, but it's got some room to the downside. This is the kind of the problem with everything big this week, is everything's not really at resistance. It's in between resistances. So it's very hard to tell directionally, where you have any support or like where the price is going to go. So, obviously we'll be looking to futures and stuff tonight to determine that across a range of stocks. Right now futures are looking okay, but not like phenomenal, right? Like Russell 2000's doing good, which can be leading. But like Nasdaq, like the rest of the equity futures are kind of up but minimally, and that's generally not a good thing. Like unless they're up like 100 or more basis points, it's not necessarily a positive. And then oil and wheat are up, which is, probably not great. Dixie's up, which is not good. We'll see how, foreign markets like Asian markets are doing overnight. Your recommended readings have any chapters into building a process for looking at stocks? No, that's something you need to figure out for yourself. I mean, there's some chapters about identifying opportunity, but you need to learn to identify opportunity on your own. I don't think anybody can ever teach you like a good way to do that consistently. That's something you need to figure out for yourself. But you take the knowledge you have and use that to find opportunity, and you will over time. Just give it time. You will settle into something you're comfortable with, a strategy which you're comfortable trading, and then you will learn how to identify opportunity that benefits that strategy. That's why you paper trade, right? Nice job keeping the Discord sanguine over the weekend. I respect your mod's moral compass and sensitivity to mental health needs. Thanks, Moon Man. I appreciate it, dude. We'll see, Subway Cup. There's a lot of incentive for them not to let the price of Revlon cross like 1130. If market doesn't push up tomorrow and GME doesn't push 2850, are you holding calls until Wednesday? No. No, I would cut the calls tomorrow. For the IV bump for earnings? No, I'd probably still cut them tomorrow. SII. For Sprott. Trying to understand hardy decomposition, so not many good resources. Yeah, there really aren't. I kind of explained it to you already. You just find a generic value for D1 and then you use it to price the contract. You should still use an options calculator. And you're only supposed to use it for at the money options. You're not supposed to use it for like it's not very effective for out of the money options. Because you get D1 values that are like greater than 2 and it skews everything. Or greater than 1 even, and you start to skew everything. I was watching 2X, caught it mid-sentence. Sounded like you got bonked in the head and your speech slowed immediately. How did you find out about Rev? Something you were interested in, or did viewers bring it to your attention? I bought some options on it to like shut someone up in chat. And then it ripped and I was like, ooh, let's dig into this a little bit. And yeah, we started to find like compounding FTDs and stuff. And so me and Gaff stayed up like all night the day before it ran really hard, or like the day after it ran really hard before it ran really hard again on like the night of August 1st, and bought a shitload of calls at market open that were grossly underpriced, and then made like 400% off those, and been in it ever since. What would you consider a good entry for Rev Jan 35s? It keeps moving up, right? Like they're not returning to their previous pricing, especially as like delta skew balances on the chain. They've just gotten more expensive progressively. Like I bought the initial ones for 35, and then the next low was like 60 and then 90, and now it's at like 110. I mean, they're just not returning to those previous prices consistently. How does a strong dollar affect world markets? Um, hmm. That's a lot for one question. So a strong US dollar, I mean, it means that we can buy more foreign currency, right? Per unit of value. So it benefits Americans traveling like overseas. It benefits importers of foreign goods. But obviously, as American companies that export or rely on global markets will be hurt, which is most American, like big American companies. So, yeah, I mean that's a simple explanation of it. It goes much deeper, but that might be what you need to know. If you want to know more about like a specific aspect, that could be a good question. Considering today's markets and FTSE, I'd say SPX being green is a good thing. Yeah. Hopefully that strengthens by the morning or later tonight. I think Russell being up is good, is a good signal. Because it's up at least a decent amount. It's what, like 65 basis points right now. Been rowing lately a little bit, not a lot. I hold a lot of shares, still buying. What do you want me to recap about them, Nick? I might look at calls too. I mean, they're a great contract. They're zero point 0.3 delta. They're plus. Um, they're super IV sensitive. And as price increases, their Vega value rises drastically. So, in the event of a run, that contract's premium is going to skyrocket. It's a beast of it's like one of the best options contracts in the market if the price goes up. Wally Khaled, welcome to Cornishon, man. Thank you so much. Any ETFs that track the price of beef? Probably. Like livestock futures? What's the best way to track chart historical IV data? Just look up like I think like bar chart or chart exchange have historic IV. Otherwise you have to pay for it. Do you think the complaint and the lawsuit about timing of RC's electronic filing of the 13D stating his position versus the fact that he had already sold a lot of it has any merits? I mean that guy is like kind of like he just files lawsuits against people for no reason. Maybe. I mean, it'll be determined in court, right? There's a lot of accusations of fraud with no, not necessarily any proof, right? And that's actually not correct. His 144 was filed the same day. We just no one picked it up because it wasn't filed through Edgar, so there was no Edgar notification, but it was filed on the 16th. I actually like copper. I've been looking into it a little bit this week. Basically, Jan 35s are a god contract. They're kind of nuts. I think cat could drop further. What the fuck is that? It already broke down through its trend. I think we can see cat return to like 175, maybe even, if the market continues to fall, we may even see it like at 167 again or lower. Right now it does not like for the long term, this does not look bullish. I think almost guaranteed that we're gonna return to like the 175 range. And I wouldn't be surprised if we slumped a little lower. Earnings are on October 25th. But I will, once it falls under like 178, we'll start watching it again for entry opportunities. Because we'll be looking to see if it gets a higher low, right? Like if we're getting an uptrend here. But the way the market's trending, I would say that's unlikely. We're more likely to get a lower low. Just if you have 250K, turn it into a million. What's your move? A bear spread on the SPY, probably. Tesla puts. No, too erratic. I would say, well, you want to minimize risk, right? Because you have so much exposure. So, like, spreads are better. Pretty far dated, like January or something like that. Don't forget that, like, 3M isn't heavily influenced by its options market, right? Like, 3M has got a free float of 568 million shares. So there's some effect from its options market, but not it's not like GME or BBBY, right? Like, they're not, these more liquid stocks are less likely to follow the delta hedging of their options market. It's not a nothing burger. I'm sure with that quantity being exercised, there will be some net effect into next week. Are you done playing Sega? I don't know. It's still interesting, I guess, but for the most part, I think so. I watch it still. I haven't seen like any consolidation that I've been specifically very interested in lately. It's just been kind of dropping. We'll see if it finds like a new level of support. Probably. No, well, hopefully it would find it soon. If it does find support here, it may be a good opportunity to go long on it again. I mean, as long as monkeypox continues to be a thing, they'll have interest, right? And vaccine orders have been picking up, so we could see stability in like the $15 range, and then potential volatility on any kind of news. I still don't like it because it's bio stocks, right? But because you're always waiting for that news cycle to improve price, and it doesn't always come through for you. You live stream using the Robinhood chart? I'd have to open a Robinhood account, which sounds awful. You ever found out what was going on with Nerve? Yeah, it has a tiny float and someone bought a shitload of it, which, you know, fucked up someone's short position. Right? I mean, it traded obscene amounts of volume in excess of its free float. So what I'm waiting for on Nerve is for it to come back down, stabilize, like it's gonna find a floor somewhere in here, right? Um, and then FTDs from all of this will start to come in. That's what I'm waiting on. So Nerve is very like early, right? This is the initial, like the initial run. But this is going to spin off just an obscene amount of FTDs because the float is so tiny. It's only 4.55 million shares, right? It doesn't have a lot of ETF exposure. So there's similarities there with like Revlon, for instance. I'll want to see the FTD reports because right now it doesn't have very many, but after this, it likely will. Yeah, just remember your downside risk, but if you can manage your downside risk, synthetic, I think synthetic long positions aren't super profitable. Like obviously if you're buying like a $5, like selling a $5, like at the money, they suck. But if you're leveraging it into $35 calls, then it's kind of awesome. Wait, that doesn't seem right. I don't think the skew's that extreme anymore. Fubo, Revlon. I'm sorry. You're talking about Fubo. I thought you were talking about Revlon. 5Cs, buying 5Cs with the credit. I can sell one CSP for 3 calls. Maybe going as high as 750 to get 10 calls at 750. Thoughts? Let me see. I mean, you could get assigned on those because you're selling in the money CSPs, right? And if you get assigned on them, you've got to buy those shares. Let me look at the pricing on those. I didn't think the skew is that insane. Jan 23 fives are 213 and the calls are 55. It's not terrible. I mean, yeah, if you can afford the early exercise, which could happen, then I don't see a problem with it. Just, I mean, are you careful not to like over leverage on margin or something? I thought you were talking about Rev. I'm sorry. Yeah, Fubo. I mean, it seems fine. You're still buying it like roughly what $2.76 a share. Okay. Oh, okay. Yeah. If you're only cash, that's probably fine. Would you ever consider forming a fund? Yeah. Thought about it a lot recently. Swinging Rev 35C. What's a good profit target? Like 20%? Yeah, I mean, usually when it runs, it can run a lot more than that. You have to. The problem is the runs have been so short lately that it's hard to capitalize on them. Um, but I have like 25% of my contracts set to sell at like a 30% bump. What's up, Bob P? It's been all right. Profits are profits. It never hurts to take risk and gains off the table. There's always another play. Yeah, I mean, it's true. There's always something else. There's always another play to make money. There's always something else going on. Finance, Vim. Signify Health. SGFY, too late for entries. Let's take a look at it. Chasey. Very, very chasey. Still better than the fucking IPO price. Terrible earnings. But that may not matter. Merging with who? CVC? Oh wait, that's not. Ooh, multiple bidders. Maybe not. The technical's good. I mean, who the fuck knows where it's gonna open, but if you can get it below $30, it's not terrible. Is there a BBBY contract you spot in the chain next year with similar characteristics to the Rev 35C Gen 23 contract? Why the fuck would I buy a call on BBBY? Willie. There were, but IV's crushing out, so the delta value on the leaps is dropping. I mean, I'm serious. Like, what's the like? There's Opex and there may be exposure, but I can't think of any other like good reason to go long on BBBY besides what could potentially be a non-event. Could you TA on Apple? Sure. Why is this open on all my screens? Apple's approaching like its long-term trend resistance. Looks like it bounced off of it on Thursday and Friday. Move up to like 162. I already closed my Apple puts on Thursday. Last week. But maybe back to like I would look at 160, 162, and 163.80. If it falls and retests the at like, and your risk would be here at like 155 to 156.14 to the downside. So the risk is kind of wide. You could set it tighter if you want. You could set risk at like 156.95. You tend to invest in struggle food, ramen, hot dogs, Slim Jims, Kraft Heinz. I think these are drawn on the 4-hour. Nope, they're drawn on the daily. Yep. Can you play far out of the money put leaps the same way you do calls to capture IV? Is there any difference? No? They generally have less delta sensitivity. If I want to buy shares of Apple, would it be good to do CSP at 155? No, I don't think so. I think if the market drops and Apple tightens its expectations and margins over the next 2 quarters, the price of Apple is going to slump probably back into like the 140 range. So I would have no desire to buy Apple at these prices. Up to you. If you think 155 is a good price for Apple, obviously you can buy it there, but I wouldn't. Can you humor me and look at my uncle's penny stock? INKW. What the fuck does this company do? Computer peripherals? Huh. It's massively shorted like every other fucking penny stock. It's got some interesting correlation with GMA, like the Opex cycles. So I don't know what ETFs it would be included in. It's curious. A lot of similarities there. It breaks off a little bit here, but the Jan 6 stuff is interesting. Some sort of ETF thing going on here. For that, I have no idea. Ketogenic infused beverages. Why is it listed in the electronic technology? So, okay, it's listed as computer peripherals, but they make beverages and enhanced athletic drinks. They've been around forever. There's no news for it. I mean, it looks like it's returning to 8 cents. I hope he made money when it ran to 2 cents. Or 0.008 cents, rather. Yeah, there was a little while there where IV was high enough, Willie, that some of the like January BBBY calls had really similar properties. But IV fell off, right? So decent opportunity for selling Apple CSPs. I'd confirm risk before I sold them. Make sure it's not going to drop to like back below 157. Could be a good opportunity to sell them below the trend there. Like if I were selling Apple CSPs on this, I would probably be selling them at like 150 or 153, depending on how far out I was selling them. I think you're not going to have individual strikes except on the weekly chains. $150, $250, maybe. I'd be careful selling them too far out, though. Would you advise drinking and placing orders on the weekend at the airport? Probably not a great idea. You said you have a portion of C35s set to sell at 30%. Is that an increase in the contract price or the underlying contract price? What I would probably do is sell 155 CSPs after I could confirm like a bounce in the short, like on the shorter time frame. Like if I could confirm stability here at 155 and another move up, I would probably sell weeklies right below like 155 or I'd sell them at 156, like 157.50. If I really confirmed a move up, like back above 158, 157.50 maybe. There's definitely support here, but if it falls through, you know, you're buying shares and you're buying shares into a downtrend, which is you don't want to sell CSPs on a downtrend like this. Right? You want to sell CSPs like when you've confirmed an uptrend like here. Right? So you'd want to sell CSPs like in the money here when you've, you know, found stability and a bounce, or in the money here. You don't want to sell them when the price is dropping, because then you're getting assigned on shares while the price tanks. What about covered calls on Apple? Probably fine. They're not, you don't get a lot of premium for them. Is that it? No more questions? Have I exhausted all the questions? Jfresh asked me to bang his wife while he watched. Thoughts? He says he's gonna watch, but then he always tries to participate. So be wary of that, Carl. I mean, unless that's your thing. All right, guys. Thank you so much for tuning in, and I will see you bright and early tomorrow. Pickles Picks will be out tonight at probably around midnight. Later, everyone.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.